In the tumultuous economic environment of the past 3 years, a staggering series of developments has left both experts and the public bewildered. One of the most prominent events was the unprecedented rise in inflation rates across America. As events unfolded rapidly from the upheavals of 2020 towards the unforeseen events of 2024, the economic narrative underwent a significant transformation almost overnight. Contrary to prevailing expectations of a continuous upward trend in prices, influential figures like Walmart's visionary CEO Doug McMillon are now sounding the alarm about a potential descent into a deflationary era. This rare possibility, unseen in the country for decades, adds a new layer of intrigue to the rollercoaster economic situation that keeps a nation on the edge of its collective seat. Uncertainties and surprises in the economic landscape continue to prevent anyone from predicting what the future holds. As the pendulum swings from inflation concerns towards the potential gains of deflation, deflation may seem like a good thing in some respects. After all, who wouldn't want to pay less for goods, right? However, looking at periods when prices have dropped, especially in the United States, you'll find that it often leads to significant economic hardships. Here's the deal. Deflation spells trouble for the government because it triggers what economists call the deflationary spiral. And as you'll see shortly, deflation is a disaster for ordinary people too. When prices drop, people notice and postpone purchases, expecting to get a better deal later. Sellers start panicking and slash their prices even further to compete. This sets off a chain reaction where everyone delays purchases, hoping for further price drops, creating an endless cycle. Now, this cycle is causing serious problems for companies. Even if they lower prices, they can't make a profit and start to incur losses. This, my friend, leads to all sorts of troubles, ultimately resulting in job losses and a slew of other consequences. This was the case during the double-digit unemployment of the Great Depression years, and more recently when unemployment rose above 10% during the Great Recession. So yes, while prices may drop, it also means a decrease in demand and consumption, which in turn spells serious trouble for the job market. And now economists are starting to worry. You can understand why this is happening by listening to Charlie Munger's discussion on the issue in this clip. It's a bit long, but if other sectors of the economy continue down this path, I think it's worth considering where we might end up. Now, before showing you the clip, if you've enjoyed the video so far, please take 2 seconds to hit the like and subscribe button. I'd really appreciate it. Now let's get back to the clip.
Mr. Munger, this morning while discussing index funds, you used the example of Japan as a real example of poor performance of a major index over a long period. Indeed, the S&P 500 index declined over 60% in real terms from the early 60s through the mid-70s. Could you discuss the mental models you use to consider the impact of inflation or deflation on your investment decisions and the likelihood of either occurring over the next decade?
Well, that's partly easy and partly tough. If interest rates are going to go way up, you can obviously have a lot of deflation of stock prices. And a lot of that happened in the American period you're talking about. What's interesting about Japan is that I don't think anybody thought that a major modern Keynesian democracy pervaded by a good culture in terms of engineering, product quality, product innovation, and so forth, could have a period where you would have negative 13 years without major depression either. I think that and that it would occur while interest rates were going down, not up. I think that was so novel that the models of the past totally failed to predict it. But I think these anomalies are always very interesting. And I think it's crazy for Americans to assume that what's happening in Argentina and what has happened in Japan are totally inconceivable forever in America. They are not totally inconceivable.
As you can see, Munger emphasizes that the U.S. isn't immune to events similar to those in Argentina and Japan. Especially in Japan, there was a period known as the Lost Decade, where the country experienced a slow GDP growth from 1991 to 2001, often turning into contraction. Unemployment rose and consumer spending decreased. The stock index dropped from its all-time high of 39,000 in 1989 to below 8,000 in 2003. nearly an 80% collapse. During this lost decade of zero growth, companies witnessed their revenues and profits drying up. What's even more striking, the initially collapsing land and housing bubble led to a 70% decline in Japanese real estate values throughout the 90s. Commercial and residential property prices absolutely crashed following the burst of the bubble. The crisis spread from stocks to the broader economy. Japan grappled not only with stagnant growth, but also with persistent deflation in prices and wages. Over the past decade since then, ultra-loose monetary policies like zero interest rates and quantitative easing failed to reignite inflation. An aging and declining population exacerbated this issue. Munger portrays Japan's economic history as a significant reminder that serious financial crises and prolonged stagnation can unexpectedly emerge even in highly developed countries where asset bubbles burst or credit markets freeze. The fallout can be severe and protracted. No country, including the United States, is entirely immune to such an event. Now everyone is asking, is this indicative of a deflationary cycle? Let's illustrate with a few examples. Take lumber, for instance. Since its peak in April 2021, the cost has plummeted by around 72% compared to the 2019 average. Used cars are following a similar trend, with costs dropping by 19% from their peak in 2021. Even crude oil, a major player in the global market, took a hit, plummeting by 37% since its peak in June 2022. New homes have seen a gradual decline of 17.7% since their peak in October 2022. In summary, there are strong indications that deflation is making its way through the economy. As these changes unfold, the burning question on everyone's mind is, could the housing market be the next domino to fall? Thank you for watching Wealth Stream 101. Don't forget to subscribe to the channel and leave us a like below this video.